Morning, everyone. How are we all doing? I'm doing pretty good. Not too bad. She's doing good. Maybe, Richard. I've been pretty swamped this morning. Did anyone get a VIP email? Perfect. Thanks, Bob. Yep, I did. Nice, Kathy. Morning, Miles, Daniel, Richard, and Fred on YouTube. Cyrus is here. Hey, Norman. James, good morning. Pink Sparkles is here. You're welcome, Carlos. It's very nice. I will grab that. We have a special guest coming in today.
Well, hello, everybody. How's everybody doing? Say hello to everybody. Hello, Fred, Richard, Wilford. Hello. Somebody said hello in, I don't know if that's Chinese, Korean, or it's an Asian language. I apologize. I can't read that. But good afternoon to you as well. Let's now say hello to everybody on here. Let's say hello. We got Jody. We got Tim. We got Michael, Clyde. We still haven't got his EKG back. We gotta. He seems to be all right, but God only knows. Cats, EKGs. I don't know. I don't know. He seems okay. He was all right this morning. Phil, morning. Robert, Pete, Arturo, MBV. Good morning. Gus, Rick, Cyrus, Darren. Gave me a good return. VXX gave you a good return. Good, Cyrus. I'm still holding potential. Love to hear that. Norman. We got Jason, Christopher, Ryan. We broke a record today in the morning show, so I assume people wanting to come in here today as well. Who knew? We had over 610 people, Matt. Yeah. Lubov, New York. Hello, Lubov, New York. How are you? iPhone is here. Kane is doing well. Good. I'm glad. Kane is doing well. What do you think I'm going to recommend somebody to you that's not going to do well? Silly people. Vernon, Wardog, Randy, how are you guys? I hope everybody's doing great. I hope everybody is doing great. Stacy says, I followed you from customer service. Excellent. Good. I even had a chance to have some lunch. Yeah, I was in customer service live. We had a good time. We had about 100 people in there. I thought it was a lot of fun. Hey, Brett, how are you? Kaya, how are you? Wayne, how are you? Stacy, Wade, Kaya, Brett, Ivan, Jack, Sylvia. A lot of people coming in. Perry says Apple up 50%. You should have waited for the market, Perry. Beam me up, Scott. War Dog. Good. I'm glad you guys like the customer service live session. Glad that it worked. All right. The room is really light, isn't it, Matt?
Yeah.
What's going on? So before we begin, FYI, I have. Hold on a second. I always have something going on. Not what I have. I have my. Oh, I know what I have. One second. Let me pull that up here. Got the CTA. We got this. We got that. iPhone. I'm still iPhone. Yeah, you're still iPhone. Exhausted room. All right. Let me go ahead and share my screen. I already have my TC2000. Matt, can you give me the screen? Thank you, sir. Let me go ahead and share my screen with you. We'll go right here. TC2000. Put on YouTube back. Kind of trying to juggle a million things at once. All right. All right. So, number one, I am going to be live with Chris. And he's joining me in the VIP room. He's going to join us in about half an hour here to say hello. I'll be joining Chris Culver. We're talking earlier this week about he's flipping most traders' mistakes into daily cash opportunities. I love how that sounds. And he's knocking them out of the park so that I had to hear more. Today, he's giving everyone the full rundown on how he's targeting these payouts every single day. And I'm looking forward. And actually, Penny sent me a nice email saying that she's happy with, she's changed a few things here and there, but she's pretty happy with what's happening. And please, Penny, don't let me paraphrase you. I never want to like share people's opinions or anything like that if I'm making a mistake. Let me give you a link for that.
Already posted it.
Oh, well, there you go. Thank you, sir. Thank you, sir. And let's see what's going on here. All right. It looks like more people are coming into the room. And as I said, we'll have Chris here shortly as well. Put that here. Let me delete that here. You know, having a lot of monitors is a blessing and a curse, you know? All right. So, today's a big day. We're going to talk with Chris. It's going to happen soon. Let's talk about the market. I don't know if you guys heard me or not in the customer service live. Some of you might have, some of you may not have. Just to give you just a quick briefing before we get into stocks and all that other stuff. And if you guys have any questions, and please ask. One thing I want to cover, and I did cover this in the VIP room, and I want to make sure you guys understand what I'm saying because I think a lot of you guys may be confused about something. For the last few, I got three or four. I don't remember 3 or 4 emails this morning. It was either 3 or 4, and no, actually, it was 3, and they all said pretty much the same thing. Well, you've been telling us for the last few weeks to lower exposure, and it looks like you were right. But why didn't you take off positions in the why did you not take positions off in your various programs if you saw this coming? To that effect, something to that effect. And my answer to you is, here's my answer to you. First of all, lowering exposure and taking trades off the table are not the same. They have the same effect, but they're not the same. The majority of people, remember, I come from an institutional background where people don't trade one contract or they trade size. So for somebody to reduce exposure, maybe going from 10,000 shares, I'm making these numbers up just to illustrate a point. They have no meaning whatsoever. It may be going from 10,000 shares to 3,000 shares, or from 50,000 shares to 5,000 shares. It doesn't mean they're not in that asset. As a matter of fact, and again, I'm just simply repeating what I said in Customer Service Live. As a matter of fact, the majority of hedge funds Like John Henry, for example, one of the biggest hedge funds, he was always net long or short a position. He was always long or short 30 assets. How much he was long or short was a whole different story. And this is why I say it's a big misnomer to think. I'm kind of jumping topics, but I'm going to the exact same location. So if I gave you the rules of the turtle system, you would say, well, those rules are so easy. I could do that in my sleep. It would take me 5 seconds to execute those trades. And you would be right. What you would be spending 90% of your time doing is adjusting positions. You would be adjusting positions, equalizing positions to each other. You guys might have remembered me telling you this before. Adding, reducing. 80% of what you see institutional traders doing all day long is managing their exposure. Exposing higher here, exposing lower there. Buy more. That's why I say they don't look at the market like you and I do. They look at going higher, going lower, going higher, going lower. They have a button that just programs buys near the VWAP, and they just keep buying. They're not looking at your levels the way you are. They're not saying the stock is too expensive or too cheap. What they're saying is, I need to have more exposure in financials. What financial stocks are the strongest? My program buying is just going to continue buying that. And that's why you see a run up, and that's why price goes beyond levels you guys expect. I'm digressing from the point. The point is, similarly to how these institutional turtle traders would equalize positions, the majority of things most institutional traders do all day is manage their position size. They're not making decisions to buy or sell. They have 10, 20, 30, 40 stocks, not more. Like we do, a watch list. They know that they're going to be holding these stocks for the next quarter. So all they're going to do is just increase exposure, decrease exposure, increase exposure, decrease exposure. So when you hear the word lower your exposure, decrease your exposure, it doesn't mean you need to liquidate all your positions. It means you have, let's say you have 5 longs. Well, maybe you should have only 2 longs. Now, what the hell does that have to do with our programs? If you look at any of our programs, how many stocks does Quick Strike, does A-Line, but you don't need to mention the stocks. How many stocks do any of them have in them right now? 1, maybe 2, right? So we don't have a lot of exposure. B, you don't know how much of each of those stocks we have. So just because we have something doesn't mean you have to have 50 contracts. My point is this: lower your exposure means reduce your position size from 10 contracts to 3 contracts. It doesn't mean forget about this trade. You understand? And this is why I say only you know what your account is made of. Only you know how many tech stocks you have. Only you know how many manufacturing stocks you have. I can't drive that bus for you, and I don't want to, and I'm not interested in it, and I never claimed I would. The point is, if you look at any of our programs, we don't have a lot of stocks. We don't have any programs that have 15 positions or 10 positions. Number 1. Number 2, most of our programs, the options have plenty of time left. And number three, they haven't hit their alert levels to exit the trade. Okay? They have to go below specific levels. So, me telling you to lower your exposure and me doing what I'm doing, that's 2 different things. Capiche? Did you understand? All right. Let me read a few of these testimonials and then I'll go on here. You were going to explain how it would scale into a position. You were going to explain how you would. Yeah, I will right now. Allocation size by ticker or trade. Both. That's if I have 10 shares. If I have 10 shares of one tech stock, of 10 tech stocks, it's the same thing as having 100 shares of one tech stock. Do you see the point? That's why I tell you, you can't have too many cooks in the kitchen. If you listen to what someone says and then you listen to me and then I don't know the portfolio that the other person is putting you in. I don't know how much tech stocks you have. That's why the best thing I could tell you is lower your exposure, increase your exposure. Okay. MBV, Roger Spy Meta, MBV, you seem to want to know whether you and the girl should have kids. I'm trying to determine whether you should go to the bar to meet her that night. Uh, she may be addicted to drugs, and you don't want to be with anybody addicted to drugs, but you need to find that out first before you marry her. Let's get to what we need to do. Before you ask me if Spy and Meta all got resistance of upper VWAP, why don't we take it slow and back away first and take it one step at a time? All right. Um, yeah, so a few things. If you want to increase your exposure on a stock, you want to get confirmation on a trade. Typically, you want to get confirmation on a trade when you go beyond a specific level. So let me give you a good example of that using the price data that we have here. Let's just assume you were trading the SPY today. And I'm not suggesting you do. I think it's a foolish move. But let's say you were trading the SPY. Well, the first thing I would do is I would wait for us to trade above the VWAP. At this point, I wouldn't even wait for the VWAP. I would wait for you to trade above this area because that's a pivot. And we couldn't hold this pivot. So this becomes more important than the VWAP, even though it's above the VWAP. So I would not only want the VWAP to break, I would also want to trade above the 591.58 level. Then I would probably, let's say that I wanted to load up a total of 10 contracts. So at this point, I may buy one contract right here. Now, when we take out the high of today and build a consolidation here to show me that we're not going lower, I would probably at that point buy a second contract. Then I would switch to the daily chart and I would make sure that we're at least here. I'm looking at the same thing here. Then I would make sure we're at the election VWAP before getting long the fourth contract or the fifth contract. And then I would wait till we're above this bar to get 5 more contracts. Capiche? You see how I used key levels to get me in every time? And if we break that level, you can get out at each level. You have some support each at place. For example, you have the VWAP right here. You have that pivot right there. You have the high of the day. You have this area right here. Every single level. Every level has meaning. Every level has meaning. You understand? You're welcome, Carlos. He said, don't say election VWAP. What are you referring to? Barbara, there's only 2 kinds of VWAPs. There's an anchored VWAP and then there's the VWAP. If it starts with a VWAP, what you're saying is inaccurate. Barbara, he showed you how to anchor your VWAP. He never showed you the VWAP. He showed you the anchored VWAP. Anchored VWAP, AVWAP. AVWAP, you have to anchor to election, annual, quarterly, earnings date, quadruple witching. It's like hummus in my fat Greek wedding. Hummus on everything. It helps everything. VWAP on anchored VWAP on everything. So Barbara, it's the anchored VWAP. The VWAP is very simple. There's just one VWAP, and it's right here, and it starts at the beginning of the day, and you don't have to anchor it anywhere, so there's no A in front of the V. Barbara, now do you understand, or did I just confuse you a little more? Let me know. Let me know if I confused you, Barbara, or if I explained it. Let me know. And Barbara, my Windex and everything, right? Windex and everything, hummus and everything, whatever works. Barbara, my suggestion for you is to fork out $399 and to buy the full-time trading class where I spent 6 hours talking about that. That's what my suggestion is to you. Okay. Uh, the full it's called the full-time trading class where I spend like 6 hours talking about the VWAP, where I anchor the VWAP, what the VWAP is, how the VWAP, where is it anchored, who anchors it, how, all that stuff. That's right, Mike. And by the way, all of these things you can get from Customer Service Live. And don't forget, I got Chris here in about 10 minutes. He'll here's a link for that. Yeah, and then watch it like 3 or 4 times. Here's the link for that. All right. All right. Katie says, I know you're not customer service, but I just discovered alerts in one click. Is there a reason they're not put in Telegram? With so many traveling, this is an issue. Katie, you're making a lot of assumptions there. Katie thinks that everybody here has all of my programs, so that I should be a Santa Claus and give you guys alerts in the Telegram channel for all the programs for free. You have any other ideas do you want to share with me, Katie? Anything else you want to share with me? Anything else that may be helpful? Or maybe I could just go back to what I'm doing. Well, what are you saying then? Because that's what I'm reading. You're saying put alerts in Telegram channel. Then please be clear on what you're saying, because that's what I'm reading. My suggestion is for me to just do my thing and you deal with customer service on this. Well, that's what she said. Why don't you just put alerts in Telegram channels? So I'm just want to make sure that's what we need to do. The pit doesn't have that issue. Everything is in the Telegram channel. Thank you, Penny, for clarifying it. Thank you. I appreciate that. 2 minutes, we'll never get back. All right, guys. My job here is to help you. All right. Sirius is down. Sirius old. Hey, Chris, how are you?
Good, Roger. How are you?
Good. Folks, for those of you who don't know Chris, he's right here. He's going to be with us today, and then we're going to be. His name is Chris Pulver, and we're going to be joining him at 1 p.m. for a webinar. And let me give you a link. It's right here. It's going to be a lot of fun. We're going to hang out together. And meanwhile, Chris can hang out and he can look at the stocks that I'm recommending to everybody. And he can comment. Please feel free to comment. I love the comments. All right. So Caesars. China's not doing very well. Global economy may not be doing so well. 50-day moving average right here, 38.85. $29 days to go. 69 delta, 35 put. Now, I did not pick this because it has high volume. I picked it because it has a good delta. And we could tell right away just by looking at the bid and the offer to see if there's open interest and if the market maker is participating and he's working with us, or if he's just being a total jackass and widening this wider than the Grand Canyon. All right. Katie says, when you put an alert in Telegram, then we know that position has been added to one click. Katie, I don't deal with one click. I have nothing to do with one click. That's customer service stuff. I honestly, I don't deal with that. Yeah, that's something they're going to have to explain to you. Low has to break the 200. It did earlier today, and it is below the VWAP. I would be watching this very, very carefully, especially if interest rates continue going higher, as we could see here that we have not filled any of the gap on the TLT trade right here. So right here. This is not helping the stock market either, by the way. Not at all day long. No bounce, nothing. No soup for the long bond. Powell can keep singing and dancing the same song and dance, but the long bond's getting worse. All right. So if that continues, Lowe's is not going to be in a very good position because Lowe's is home consumer goods, building homes, anything to do with interest rates, consumer goods. You've all heard the song and dance before that people buy homes and things for the homes and they spend money. And Lowe's tends to do a lot of research. I had a friend of mine, he was actually an employee of mine. He used to work at Lowe's and he told me the things that they do before deciding to open up a new Lowe's or Home Depot. Folks, I'm going to tell you something. It's the amount of money that these people spent in trying to figure out if they're going to open up a new store is just mind numbing. All right. I know actually investors who buy real estate based on how many Lowe's and Home Depots get opened in that area. That area that I'm actually looking at, World Golf Village, they just literally build a Lowe's and they're building a Home Depot across the street as we speak. Not liking the SPY right now, but we would need this to break. But if it does break, I would use the 15-day EMA right here as around 8-day EMA, right around 257.80-ish. We would look at the put side. We would be looking at January 17th. We would be looking at 82 delta, and we would be looking at the 260s right here. We want to be a little bit in the money here. We don't want to buy. We want to have intrinsic value. Just so you could see here, this option has $14 of intrinsic value, and the cost of the option is right now about $15. So you're literally spending about $1 of you're renting to own here. You're not just renting. Let's continue. SLB. Now, one of the reasons why I like the stock for a short is because it already broke the low. It's not holding on. It's weaker than the market right now because the market is doing everything possible to still hold on, although it's not doing such a great job right now. And every time we've hit the VWAP, we tend to bounce off, as you guys could see here, which is very, very, that's not a good sign. Not seeing a lot of love from the energy sector. I would go to the 15-day, about 40.33 as a stop. And then I would go 29 days to go, about 91. Why 91? Because there's nothing closer. This is too low. This is fine. We want to have intrinsic value. Let me show you this. You're paying $3.50 for this option. $3.17 is intrinsic value, which means at expiration, if this stock was to expire right now where it is, you would have $3.17 coming back to you in terms of the stock. That's pretty good. You're only paying 40 cents versus going out of the money and paying $1, and only having 68 cents of intrinsic value and so forth and so forth. So it pays to be in the money sometimes. Sometimes you get what, you pay for you get what you pay for. Starbucks, I found this interesting. Now, I would be careful right now. I would not be selling Starbucks. I would be adding it to your watch list right now. Starbucks has to break the 200-day moving average. All right. If we don't break the 200-day moving average, it's not going to be looking good. By the way, mags are not holding at all. And QQQ is not doing such a great job. We just broke the base we've been building all morning. It's not good. So just something to think about right now. But again, wait for Starbucks to break down. Once it breaks down, then we will reevaluate it. Maybe wait for a pullback to the 200-day, but nothing right now. All right. Colleen says, I got here late. Sorry, but what causes such a mess yesterday? No, it had nothing to do with politics. It had nothing to do with Musk or Trump. It has to do with Powell making an ass out of himself, as he often does. Hey, Chris, what did you think of yesterday's? Hey, we're going to lower rates aggressively, but next year we're gonna. What did you think of it?
Yeah, he was actually surprisingly transparent. I think more so than he usually is. I mean, usually he's very two-sided where we're talking dual mandate and he tries to balances everything out. He doesn't really give any answers. He dodges a lot of the Q&A. And yesterday, he spent a lot of time on inflation and a lot of time on tariffs, which I didn't think he would address either one of those things outside of just the numbers are the numbers. Inflation's been improving. I really didn't see him coming in to disrupt the little holiday rally that the market typically has. So, I mean, as soon as 2 o'clock hit, we had a big move to the downside, but he certainly didn't help bring it back up. And I was surprised that he said, I'm really optimistic for 2025 when it's like you're going to be restrictive. You're pretty much done cutting rates. The market's scrambling to figure out when is the next 25 basis points cut, maybe June, June, July next year, according to the CME Watch
Right.
tool. So it was a very different Powell than what I expected. So, it was a bit of a bloodbath yesterday, but the nice thing is I've had hedges running, the last 30 to 60 days for this exact reason. I didn't know if this is going to be the proper timing, of course, but it's the last major catalyst. I mean, we have PCE tomorrow, but that's it. So I think at this point, Roger, it's going to be very difficult for the market to revisit all-time highs by the end of the year. The Santa rally's pretty much been canceled, in my opinion.
Yeah, I think right now, especially next couple of days, I think we're going to just kind of consolidate and kind of tread very carefully and kind of probe the market to see what happens. Maybe go a little higher, a little lower, but I don't think we're going to. I agree with you. I don't think there's going to be a lot of firepower from this point on, unless we start breaking key levels. But
Right.
we've already kind of seen everything out there. My 5 cents is, and one of the reasons why I think the market did not like what he said yesterday, and yeah, he was being. My 5 cents is that what he really wanted to do was walk back what he did the last 2 months ago and say,
Yeah,
you know what, guys, we should have just not done anything. And but he's not going to do that. That would be a political suicide. So I think, honestly, I think I think what he should have done was say, you know what, we're not going to do anything. But if he didn't do anything yesterday, the move would have been even worse. So
sure.
I think right now he's put himself in a corner, and I think the market kind of saw that because I mean, I'm sure you watched the PPI. You saw the PPI last round. It was
Yes.
awful. It wasn't good at
Yep.
all. I mean, it was
Yep.
bad. So
And
he didn't do as much. He didn't do as much. He didn't do as much. Um, he didn't do as much blowing smoke up people's, or, peeing on their
yeah,
leg and saying it's raining. I agree with you, but at the same time, I think what he really wanted to say was we made a mistake and that we were too early, and next year we may undo a lot of what we did. I mean, I think that's kind of like that, and I think that's kind of what he said without saying it.
right.
So I think that's what I think that if he actually did what he usually does and just kind of talk on both sides of his mouth, I don't think anything happened. But I think he knew. I think he's expecting a storm, and he knows he's going to get quoted. So he doesn't want to say anything that's going to put him again. He's really political. He's really without passive aggressive, but he's very very political. He's a sly fox, that Powell.
Sure,
All right.
he's been really crafty.
Yeah.
What do you think PC is going to matter much tomorrow? I've been waiting for the forecast to print all week, and core PCE is expected to be 2.9 tomorrow versus previous 2.8. So CPI, PPI, and PCE, all 3 months prints would be higher than expected. The one thing I'm actually concerned with, Roger, and we may have talked about this a little bit in your webinar this week, was the U.S. 10-year. Again, it's
Yeah.
up to fresh highs. And
Yeah.
that's the one chart that I'm watching the closest going into 2025 to see how much pain there's going to be.
Yeah, and folks, he can lower rates all he wants, but the reality is he started lowering rates right here, right there, and here we have the 10 years right here. I mean, look at this trend line here. I mean, that's a trend line. Look at that. Look at that. And remember, when 10-year, and how long have I been telling you guys here? Almost every day. Folks, the 10-year is breaking down. All of your adjustable mortgages are going higher. They're not going lower. So again, I think we have a problem. We have a problem. And yeah, I told folks yesterday and today and almost every day, keep an eye on the 10-year. If the 10-year breaks down, we're not in a good place, guys. We're not in a good place right now. I would be very, very careful. All right, let me finish these things up. Matt, can you post the link? Actually, I have it right here.
Got it.
Got it right here. All right. Post it on YouTube, would you?
I have been. I'll do it again.
Yeah. All right, there you go. All right, guys. So let's talk a couple of more shorts I have for you, and then we'll move on to the long side, and then we'll all go to Chris's room and hang out there. And Chris and I will do a cool class for you guys. I can't wait to hear what Chris has to say. Chris, what was your performance? You mentioned to me like nine. Yeah, I have it written down right here.
Mm-hmm.
It was you had just somebody told me, somebody was telling me this morning that the last few trades did really well, especially in the move. Can you just give us a little bit of that? Tell us about your last few trades.
Yeah, we're 59 of 65 for the last couple of months, and just this week we're 6 for 6, and I've got another trade running that's about to be 7 for 7. So yeah, really active every single week. I mean, when we post our weekly trades, usually it's 5 for 5, 4 for 5, 6 for 7. Some of the more aggressive weeks we've gone like 10 for 10, 12 for 12. So it's a really good daily income trade that I see a lot of traders have made it their own. They run with it. It's one of their core strategies. They trade this thing, multiple times a day. So, the proof is in the process. I tease the strategy. This is something you can do every single day. So it's a nice little income trade. So yesterday, for example, obviously the market had a huge catalyst in the afternoon. The market took a huge nosedive. We were out with profit by, just after 10 a.m. So nothing to watch. We, we
Nice.
already we already made our trade, made our money.
Beautiful, beautiful. I
Yep.
love that. I love how that sounds. That really what Ted says the system works really well. Today was great. Love that.
Yeah.
Love
Nice,
hearing that.
Ted.
Nothing
Yep.
makes me happier. All right. Good. 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 That makes me very happy. All right. AES. I would use this area right here, about 1360, maybe go a little higher to get out of the zone. As resistance, I would go down to January 17th, 70 delta. Bid's pretty good. Offers pretty good. Right here, 13 put. Right there. Right there. All right. And last but not least, as you guys know, I gave you a comment, a little applied materials, semiconductor stocks. I warned you a long time ago, don't buy semiconductors till we're above 265 on SMH. I know a lot of you guys listened, and right here we're making lower highs. It's not a good sign. We're below all the averages. We broke down from this compression, and now we're breaking down. And my suggestion would be to look for a short here, not a long. You got about 29 days to go, 67 delta, maybe 78, 67, somewhere right around here. 170, 175, somewhere in this neighborhood right here. 170, 175 puts right there. Okay. Nice and easy and simple. Now let's go to the long side. Now, folks, please, please wait for we're above. I'm just telling you right now, if you want to buy these stocks, wait for the SPY. Wait for the SPY to trade above the election VWAP right here and above the 8-day EMA, please, which happen to be on top of each other right now, right there. So wait for us to recover, at least go to 599. Don't go long. We're bouncing off the 50-day moving average to the downside. The VWAP huffed and puffed and went below right away. After a move like yesterday, this is not a great move. Not a great move at all. I am telling you. So I'm going to give you these stocks, but you're going to have to give me an honorary promise that you're not going to take them. You're going to wait till we have clearance. All right. All right. Google. I still like Google. It's hitting at the 8-day AMA. It's holding really nice here. I would use this this level right here as a stop, about 170, high 178s. Obviously, would switch to calls, or we're going to be in deep doo-doo. Go 29 days out, 72 delta, one what 180 call. Where's the doggy today, Chris?
Oh, he's here. Same spot, Roger. Right there.
There's the trick. Love that. You gotta post them on Telegram sometimes.
Yeah, for
So
sure.
cute. So cute. I'm a big animal lover. Apple. I still like Apple. I still like the FANG stocks. Notice something interesting. Let me just look at FANG. It's still above the 15-day, right at the 8-day. I mean, these things just don't want to give up the ghost. If they do, we're in deep doo-doo, because look at RSP. We're already below the 100. So not good. Not good. That's who gives Chris all his trading signals, Benji.
That's it. It's like the manatee.
Yeah, exactly. See, I have Clyde. He has Benji.
That's right.
So Apple's looking fantastic. It's about to hit the VWAP. Please, please, please. If the market breaks, nothing is going to save you. My brilliant chart analysis, and I'm being sarcastic, is not gonna save you if the market's breaking down. Everything is going to go down with it. Okay. So I'm just explaining to you. You want a tailwind. This stock has tailwind, but the market has to be the wind. 29 days to go. About 73 delta, 245 call right here. January 17th. Another stock that I like, Visa. Visa. I mean, if you guys think credit spending is not through the roof right now, whew, and I just want to make sure you guys know something. Somebody sent me an email telling me this, and I was like, that's not what I'm talking about. A lot of people think that I say that when interest rates go higher, it's good for the credit card companies. That's not. I want to explain what I mean because somebody was confused by that. A lot of people think I mean that when interest rates get higher, they make more money. They actually don't. They make their money on the transactions. The bank takes the money. What I meant was when the economy gets worse, people rely on their credit cards more, unfortunately. And that's why Visa has a little of that safety margin. When the stock market goes a little weaker, people start using their credit cards more. It's not because they make more money when interest rates go higher. So somebody who worked in MasterCard sent me an email saying, I just want to make sure. So my theory is if one person asks me a question, then it's an important question. Okay, so Visa right here. I like Visa still. 29 days to go, January 17th, 78 delta, 305 call right here. I like it. I do like the stock, but again, you need to have the tailwind from the market. Like real estate, location, market first. Same thing. There's just no other ways. You can't get out of that, okay? Kroger, I was actually showing Matt this one, and he actually liked it. And Matt hardly likes anything I show him. He's like Clyde. Kroger. So I would use, probably, if I could, I would just use the 50-day. If you could use that, just use the 50-day. And it has it's got about 1-to-1 here. You could use the 50-day. I like this one actually quite a bit, and it's been above the VWAP all day. 29 days to go, 92 delta, 55 call. Surprisingly, today options are tighter than. Have you noticed that, Chris, that options are actually tighter today than they've been in the last few days?
Yeah, I think a lot of that helped with the futures market being relatively stable from last night.
Yeah.
There wasn't really much of a flush down, wasn't much of a follow through. We just had like a low literally at the close yesterday, and it just kind of slowly was able to kind of rectify and resolve and tighten things up. So we came into a pretty decent bid ask today, which was a lot different than our last vol event, which was August 5th, when everything was, crazy wide and impossible to trade.
Yeah. And also global markets didn't really take a big dump last night, which kind of helped futures stabilize as well. I'll tell you what really concerns me between you and I, the bond market. This thing really bothers me.
Absolutely, that 10-year it's been on my radar for months now, and especially so we're 100 basis points lower from the Fed. We're 96 basis points higher on the 10-year yield. Complete opposite. So that's a concern.
Yeah, it's Matt. Can you open the door? It's a little hot. Thank you. So yeah, this is really bothering me, folks. I got a couple more, and then we'll start heading into the other room. Tiva, one of the strongest stocks today. Now, you guys know I'm a relative strength guy. Thank you. Thanks, Matt. You guys know I'm a relative strength guy. So the fact that the stock is up right now, there's just a handful of stocks up. Matter of fact, I ran thank you. I ran the stock here. I ran the stock fetcher here. Let me just show you real quick. I do this in the morning before the market opens every single day. But I ran it, and 13 stocks making 90-day highs. 13 stocks, guys. Look at these stocks. Alaska's actually looking good. That's new. That's looking pretty good. Let's take a look at that one. Maybe add that one to our watch list. Let's see. So remember our test, if we have an A line or close to an A line, what we do is we anchor the VWAP to the highest price point, and we see a bingo right there, breaking out. Matt, take a look at ALK when you get a chance. Let's see how the spreads are. They're not bad. They're not bad. And we're hitting the VWAP. Definitely want to add that to our list. Let me actually physically add it to my list. Definitely like it a lot. January 17th, 70 delta, 60 call right here. Looks very, very, very nice. And I would use the 15-day EMA as a stop loss right there. Right there. Katie, I have no idea what you and Penny are talking about, but God bless you. Whatever it is, you guys go at it. All right, folks. Here's the link one more time. All right, I'm going to give you a link. Chris is going to be talking about his program, and remember what I always tell you guys. What do I always tell you? What's the only free gift Wall Street will give you? The free lunch. What is the only free lunch Wall Street will give you? Does anybody know? It's a one-word answer. Let's see how well I've trained you guys. Let's see if anybody knows. What's the only free lunch? No, not soup, not theta. It's one word. A headache. Okay, maybe. Not opportunity. Yes, Cyrus, who's been with me for 7 years. Diversification is the only free lunch Wall Street gives you. What does that mean? That means if I'm trading something and I'm completely diversified from Chris, you guys have an opportunity to make money. Let me give you not a real example, but almost a real example. Let's say yesterday you were in one of my programs and I'm a directional trader. And let's say we bought a stock. And let's say that stock started going down. Okay, let's just hypothetically say that happened. And let's say Chris is a non-directional trader and his positions didn't do anything. You would have a little cushion, you see? And so your equity curve, instead of going like this, like a little propeller airplane, it would move like a 747, like steady. You steady yourself out. What does that do? It stabilizes your emotional comfort. It keeps you in the zone. If you have a hedge, if you have other things that are unrelated, diversification is the only free lunch Wall Street will ever give you. All right. You understand? All right. Let me give you the link one more time and let me post it on YouTube. And Chris, thank you so much for joining me here today. You should do it. You should do it more often. You should come in here. But make sure one condition: you got to bring Benji along with you.
He's always here. He's always
Benji's
here.
Got to. All right. All right. Love that, guys. Remember, in 13 minutes, be ready. Chris and I are going to go hot and heavy, and we're going to talk about all the good stuff and all the advantages and all the upside of being diversified in one of Chris's programs. Tiva, yes, let me give you Tiva. Last one. Tiva, I like the 29 days to go. 72 delta. Yeah, spreads are noticeably better today. 70. I guess we really needed that. Sometimes these breakdowns really give the market a nice little opportunity to correct themselves. 72 delta, nice spread. 19 call. You could definitely work with this option. January 17th, 29 days to go. Right at the VWAP. Remember, if the market doesn't do anything well, then nothing good's going to happen. So you got to let the market show its hand first. Chris, thank you again for joining us. Matt, we'll save seasonality for tomorrow, okay?
Sounds good.
All right. Chris, I'll see you in about 12 minutes in the other room, probably with Raleigh hosting us.
Perfect. Thanks, Roger. Thanks, Matt.
All right. Remember, guys, don't miss out. Follow the link, and we'll see you guys there. All right. Bye, guys. And if I didn't cover something, roger@rogerscott.com. I'll see you guys real soon, okay? That was a good